tryna take it down, place for you just scoring mines, best the bar.
All right, ladies and gentlemen, I got your watch list coming into January 28, 2020, and the stock market triggered a few different warnings today. So one, we dropped 453 points. That's where we closed, and this was one of the first warnings we could see. But besides the move today, a lot of things beneath the surface, specific asset classes, everything related to bonds, to even commodities. There was a lot of weird movement today after hours that, analyzing it after hours, it was easy to see. So I'm excited to go over all of that stuff because this could position us tomorrow, could be one of those moments of riding the wave. So I want to talk about that. I have keys for you for tomorrow. I want to go over all the plays. We actually made a few different plays today, and we made a play from the random comment generator. So shout out everybody who's posted their watch list. And then I have a few indices and some other plays that I'm going to be looking at tomorrow. So let's get right into it. If you don't know, we're live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. Better see you there live in the morning. Again, it is free 99, and this is what I've said all day. Here was even from yesterday's watch list, last updated 1 p.m. We've talked about this. I said, prepare to be disappointed. Markets open up strong despite the pre-market sell-off. And I said, let the news bring it down to near pre-market levels by close. And that's exactly what we got. Why I'm showing you this, because we did all this live. We even made trades this morning. I'm saying this so you guys either pay attention to the watch list or come down there live. It's however you want. 20 minutes on the watch list, 7 hours on the stream. You don't want to do that. You got the stream alerts, but get your head in the game, baby. So don't forget to do that. And then the most important thing you need to do, post your watch list below. Let us know what you're looking at. If you got any plays, comments, earnings, anything, post those plays. And we're going to start with these plays. Like I said, I'm doing $100 every week on Monday, so you guys can keep posting your plays. But this was the first trade we made. I did this from a random comment generator. We are doing an experiment, so be careful with this play. It was a Pfizer, but shout out Salim, man. He got it. It was great. We're already up 18%, so we'll see what happens from there. But let us get right into it. As far as the keys for tomorrow, that's yesterday's keys. I would be more tentative about anything. Again, despite the fact that, we hit the prediction, it played out kind of how we could have expected, I'm going to be more tentative because right now they have said something after hours about like 30,000 suspected cases, but it was not official from the newswire, meaning your mainstream media and even the offshoot media sites, it is just pretty much either from a journalist, somebody tweeted it or whatever, but there's no real official source that the news market in the world has agreed upon or is circulating. So that being said, as that news slows down, it's going to change how the market reacts. And again, it's a long pace. That's what even explained how we had this play out today. But watch out for this, because if the case is peaking or they don't update, so if the cases start to go down or they are slow to update it, let's say they don't update it at all tomorrow, given the earnings and everything and that we have, you're going to see the market go up. So that's why I'm tentative, because closing here was not a good sign. We're kind of coming up a little bit after hours. I'm keeping on watch. Again, China's markets are closed because of their little holiday and everything going on. So we're only seeing Japan, but we're not seeing as much news. So as that news comes up and develops, that will have an effect on the market. Again, we've talked about it. It's going to be slow. This is why I'm saying this could be one of those days for the wave, because now you're seeing the first wave come in. If there's a moment of silence and you're not hearing too much happening, that's when it settles, and then we prepare for the next wave. So get ready. But keep that in mind. And now as far as earnings, we got a bunch of earnings tomorrow. I got them outlined here for you, but that is going to be the X factor. Premiums are moving with the underlyings in the morning. So that's what we noticed. This is what I was saying, that we have to be watching all of these earnings plays. You'll see in the morning, the stocks are pretty much going to gain or lose value, or the options based on what the stock does. But then pretty much during the day, we're still going to get that IV run up. So we saw that on the play we made today with First 5 Networks. But that is something to keep in mind. But what we don't see is how the market's going to take good and bad data. So we're only getting a few earnings. Tomorrow morning will tell us a little bit more about that. And again, after the earnings tomorrow, because again, we're going to get Apple tomorrow, which is going to be very important. But it's still very difficult to gauge how the market is digesting and buying and selling, the data, and especially just the earnings. So we want to see a few beats and misses and see what the market does, but that is going to be the X factor, as we see here, again, related to how the markets are moving with the cases. But lastly, man, keep in mind the waves and the double dip. The key we talked about today, get insurance while the house is on fire, but it's contained. So again, as we move a lot here, you want to get it during the calm moments, or again, if tomorrow stays up, we don't get cases updating, the house is still on fire, people relaxed a little bit more, so insurance will get cheaper, the puts or whatever, even on the call side. Be careful both sides, because volatility is exactly what it means, up or down, so the spreads widen even on the calls, so keep that in mind. But besides all that, tomorrow morning, we're going to get Lockheed Martin, we're going to get Pfizer. That was our random play we made today from the comments. Then we have 3M. I was considering playing this today, but we just took the FFIV instead. Then there's going to be Hog and then Polaris. And this is one, they have earnings. They have a really good dividend stock. They're an interesting stock there, but I keep an eye on them. And then in the after hours, we're going to get AMD. I don't know if I'm going to play that again. I think I might as well just play my NVIDIA position through that. Then there's going to be Apple. I already have that old put spread I got, and then I'm short those contracts from a long time ago, so I'm down on that position. But pretty much I would benefit if they go down, get murked even more if they go up. Then there's going to be Starbucks. I think I'm going to consider playing them, but I am a little bit worried about what we have there. Just, again, the market and how it's moved. We still have that one January 31st play, the hundreds, but I'll see the prices on them. I think the IV is already getting in there. Then XLNX, that's another one. They may get affected by AMD, but and even with Apple, so they're going to be interesting. Then eBay, not going to play, but then Alaska Airlines. So we made plays on UAL today. What have we been saying with watching the airlines? So they're going to be interesting. And then in the morning on Wednesday, which you would probably want to set up for after hours tomorrow, there's going to be Boeing, AT&T, McDonald's, General Dynamics, Anthem, and Black & Decker. So there's that. And now, lastly, before we get into the plays, the things that the market triggered today, and this is going to be one of the main things I'm going to be watching, is TLT and bonds. There's not only them, but HYG credit bonds. And now we've actually seen a very, very big drop with high yield credit. This is a very, very big oddity. Again, you could see TLT. Let me even overlay them right here. There's only been a few instances you could even see when they have switched. You know, they've pretty much followed each other, but anytime there was these big inverses, these were all pivotal points. Again, August, you guys remember what happened there. Then October and even in June with the trade war stuff. And then even early December when we got that run up. So the fact of what you're seeing with how high yield is moving, people are selling out of that and it's going into TLT and other stuff here. But this is huge. And now even bonds now, the 2 and the 5 years have inverted again on the curve. The 2 and the 10 year, the main one's not there, but you're starting to see curve inversion. And pretty much now with this run up so far in 2020 on the rates, this means rates are going down. This has been the biggest drop in rates for the start of the year since January 2015. So there is big bond movements. You're seeing the back and forth with high yield. This is definitely triggering something. Not only that, you're getting now commodities going up. You're getting oil really, really been down. A lot of people have been talking about that, but all of these at the same time. And again, especially when we see bond movements, this is saying something with the market. There's something out of whack, or there's something that's going to, again, they're going to need to converge and do that, but it's usually caused by events. There's no, especially with HYG, this surprised me a lot today. So beyond that, one of the plays I'm going to be looking for is setting up with something with TLT, but our TLTs are up a lot. We had TLTs we bought for like $35 for a few contracts in February. Those are worth like $150 now. So they are up a lot. It's going to be hard, but again, I'm going to wait for the first double dip opportunity, but it's been hard to play the UVXY, even though we did get a play. And again, I'm saying with the market moves, but what you want to watch out for is who is getting the bulk of the move. And that's what I've been seeing now with bonds. So if UVXY or even the SPY puts get too expensive, there could be an auxiliary play through some of the bond movements. But watch that in general. And again, keep an eye out for the curve, and we'll see what happens with the Fed. But all of this coinciding at once, it could create an effect now and what we're seeing in the short term. But don't forget, bonds are very, very slow. And again, as we showed here, this happened a few times before leading to a big move. So this also could push this back to 3 months from now, which again, that will be your April and May, where that's where we're going to run into, again, liquidity issues with taxes and everything that the Fed said last year, which was the cause of this whole liquidity crisis in the repos. So keep this in mind. This is very, very, very important. Balling off boring, baby. Shout out to bonds. But let us get into the plays. So right off the bat, we made a few different plays. The first one, PFE, February 28th. Again, you guys commented that. We picked a random comment, and this one came up. They said, let's go. They gave the play. They gave a price. We put $100 into it. So again, once a week, I will use $100 of there, maybe like 125. We'll give ourselves a buffer. But we will see what happens with that. And these, again, I had to say it online. I'm copying random plays. I'm not putting any thought. I'm just trying to show an experiment if we did, in fact, play random trades and what it would look like and what would be the performance. So please be careful with this. Some people are kind of still buying these and they're not really thinking. Again, if you really want to copy this strategy, what you could do is go to random comment picker and just throw in the URL of here and go from there. So be careful with that. Besides that one, though, I got those UALs that we talked about. I did 2 different sets here. These are the ones we posted on the watch list yesterday. Got the March 20th. So again, take note of the time. I got 5 55 puts for 25 cents, and then I got 10 of the 50 puts for 14 cents. The puts pretty much stayed in value the whole time, and I thought I bought them pretty expensive in the morning, but I got them at a lower price there. But the fact that UAL actually, moved a lot, and they didn't decay, that's one thing, so we'll see. And then the 55, they actually went down there a little bit, but these things gapped up from the morning. Remember I said we have to see where they're at Friday, so these were dirt cheap. We bought them expensive, and what I did, I put $100 in each of them. This is my first scaling in, so again, if the situation gets contained, that house gets on fire, I'm going to look to get some better puts or get more time on them. So I'm scaling in, but for me, relatively, you guys know I scale in small. 100 is pretty large, so keep that in mind, but you still got to be cautious because these are still dog shit. Again, they were yesterday going for 8 cents. So those are the first 2 plays. Then I got a McDonald's play. Again, another March 20th. And this one was for, again, consumer goods and even food stuff. But somebody did post it. Again, shout out to Colton sourcing that information. But the problem was they did sell off some of their, or a lot of their Chinese business, so they might not get that exposure. But we got these 55 puts. Given the spread, they actually stayed up. And now this is interesting because, and I think it's because McDonald's earnings tomorrow, that's what made it click. But we bought it like here, and then the stock went up, and the puts still held value. So keep that, but we got enough time. Earnings could definitely kill this, but also earnings can make this play. But again, key on the time, and especially McDonald's is going to be a big continuer, a stock that has big continuation. So keep that in mind. And then we did the first 5 for next week. This was the earnings play. They met the criteria, and what I really liked about it is that they move in general. So it's at 9% now, or $9 moves. That was expected for them to happen. So it literally fell in the expected move. It could be a good continuation. So again, this is why you always get extra time on earnings. VFC. Remember this last week? We put $40 in it both ways. Those plays are actually worth like $180 right now. We're in the money on that play, and we have till the end of the week. So that's good. And it's for continuation. So FFIV, it could work in our favor. So those might even be cheap in the morning. So watch them, because we might be able to snag some of those in the morning if they stay cheap, and then they have a big continuation move just like VFC did. So watch those. But the key I liked about this play, I was able to play both ways for $69. Again, balance the books. We've talked about that. You could see how you could get this exposure for very cheap. So there's that. And then lastly, I got the UVXY next week's. So I wanted these. I wanted a little more towards the end of the day as my prediction. I saw it coming true. The markets were coming down because I said if it did break here, 323.50, then 323 flat. Those are going to be those key levels. If it did close off, I thought it could have been a little bit more uglier. So I was like, I'll set up, but everything was expensive. The UVXY was hard to play. So what I wanted to do is get something with a small investment that could definitely play on this volatility we're going to have, especially if it's downside, but also that has good upside for me. And that was the key. So this one was $22. And it has a $650 max reward. I got to take advantage of the UVXY premiums being high. The premiums were so high, I didn't want to get $20 for something super far at the money. This is still pretty far at the money, but it allowed me to profit or at least lessen the premium because the 25 call was up a lot, so was the 18. So we're able to get them for $22 with a $600 max reward. I'll take it, but that's not really the highest quality play. But that was pretty much it. As far as everything else, I'm going to be watching all those plays we made today, keeping my eye on to them, and then really the next plays I'm going to be watching for tomorrow, possibly more UVXYs, but now something related to the bond market and how we could take advantage of it. The problem is those plays are so expensive now, so we're going to have to do a lot of finessing. We're going to watch the FFIV. We're holding those. We'll see our Pfizer random play tomorrow, and the rest of the airlines as far as what to watch. Like we said with earnings, you could watch Boeing. I like the Starbucks ones again. XLNX is going to be an interesting one, and they'll be related to the chips. But beyond that, I will also watch Uber. They had an interesting move, and I forgot Beyond Meat. They're going to have their earnings. We're still in that play. Those actually went up today. So again, you're seeing with the volatility, the earnings plays are still getting that IV run up. So it may be better to flip those coming in earnings. That's what I'm feeling. I will watch Microsoft tomorrow on Facebook because they report Wednesday after hours. So depending on what the market throws at us tomorrow, we might be able to snag an opportunity there. But I'm going to keep my eye on them. Keep your eye on the credit. Then lastly, Abivai, they came up today. They had a good approval, but then they kind of came down a little bit. I'm going to be watching those again. Brace for your long-term portfolios. Be smart. Don't even look at them. Honestly, this is where you guys got to get the practice in that. It's all about saving. Think about your next allocation. By the time you put more money in, you'll be able to get stuff for cheap, but be patient and understand it's the average of where the prices go. If anything, follow VWAP, not the stock price you see, but give yourself time. And that being said, watch Snapchat. They finally fell below 19. I want to see, because again, sometimes when they break those streaks, it could get kind of ugly. So we'll see what happens there. Then Baidu, we're still in those plays. That plays up 300% now. The China stocks are dropping big, and even though they're going up, they're still remaining down a lot. So watch those. I will keep my eye on Baba for tomorrow. And then finally, Booking. They got clobbered. And I talked about this before. I said you guys could get some crazy debit spreads on this for pretty cheap, but it made a very, very big move. Again, you didn't see as big of moves with the airlines and other travels, so this stuck out like a sore thumb. There's something there. This could be a good one to double dip. Big dollar move, so you could get intrinsic value. The thing that's going to kill you is going to be the spread and the prices. It's going to be a lot of illiquidity, hard to get filled, hard to sell out of, but if you're able to snag something and get it within a good range, those can be extremely profitable. So I'm going to definitely keep my eyes on for those. People may even be selling off for maybe expecting downward guidance, and that's the next thing too. If we get more coronavirus cases or any of those industries get affected, pay attention for upgrades and downgrades as analysts start to cover this. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your head in the game. Y'all got to take everything you've been exposed to and expose with, show that love and positivity, but take knowledge from the experience you've got through. Balance the books, be smart, be patient, and look in the mirror when it comes to taking profits. Be smart. You don't want to look back and say, oh, I should have done this, and that. No, you know what you got to do. Just look in the mirror, look at your account. What is it telling you? If you like it, take it. You don't like it, don't take it. But don't get yourself in this negative cycle. Oh, I should have done this. I could have done this. I'm stupid. No. Just move on anytime you get those thoughts and keep going. That is what you need to do, but does not give you an excuse to be foolish and reckless. So take it easy. And like we said, man, the Colt got you, baby. So be here, be in the game, flip the switch, stay hyped. Let's go.